The rich and the wealthy out there invest only 21% in stocks. Let's talk about how much cash should you invest in stocks and why is it important to spread your money. Hey guys, welcome to Think Finance. My name is Raj, and on this channel, I talk about personal finance, investment ideas, and everything money. According to Tiger 21, an organization of high net worth individuals, they only have 21% in stocks. This group believes that spreading money in different asset classes is key to building wealth. In this video, let's think like wealthy individuals and talk about different asset classes or other areas of investments and try and answer the question, how much should you put in stocks and other assets? I'll also share my target allocation and how I manage my world. So back to the wealthy crew. They have 21% in stocks. Where else are they putting their money? Real estate is a big one with 28% allocation. 24% is in private equity markets, something which is mostly for the elites. And finally, they like to hold some cash, roughly 12%. The rest of the money is spread between hedge funds, fixed income, and a few other investment areas. And this changes over time depending on opportunities and market conditions. What does this mean for you and I? See, most of us, not all of us, but most of us are so focused on day-to-day noise, and financial freedom for us means a huge investment portfolio, 401ks, IRAs, mostly tied to stocks. Talking about day-to-day noise, I have this friend who will ping me almost every day in the morning asking about my thoughts on a few stocks. What stocks? Stocks that are trending on stock tweets. Point being, as you think about building wealth, you need to have a longer-term strategy and not get derailed by the noise that's out there. Of course, you can always have your fun stash that you use to keep yourself entertained. I have mine in Robinhood and it has done really great. But I don't treat this as the only mechanism to build wealth. Indeed, my stash in Robinhood stays fixed, and if I do good, I will withdraw the gains and drop it in my longer-term portfolio. As you think about building wealth, you need to start thinking long-term and beyond just stocks and retirement accounts. Sounds like a great idea, right? So what are the options? Of course, an average investor cannot be part of private equity markets. So where else can you and I invest, and how much? Here are some options to think about. We talked about stocks, and I'm going to group individual accounts, retirement accounts, and any other stock plans out there in this category, since at the end of the day, money gets invested into stocks. Now, you could break this further into growth, dividend, emerging markets, fixed income, commodities, and few other areas. Check these videos out if you need some investment ideas. Next is real estate. And I promise I'll bring all of this together and talk about how much money goes where. Real estate is the most loved asset class by the rich. In a low interest rate environment, this is a no-brainer. Now I know there are lots of videos out there that talk about a potential crash and why you should wait. Do yourself a favor, ignore the noise and get a house if you like one. Timing the market is stupid, and any bumps in the way will smoothen out over the longer term. Again, think like the rich and focus on the long-term price. Bonds. Let me keep this simple. Ignore bonds. Just my perspective, moving on. High yield savings account. And no, your bank is not going to give you any high yield. Also, some of the products they market as high yield offer a maximum of 1% in yield. I really don't think it's worth it. However, there are services out there that offer up to 13% annually. Celsius Network, BlockFi, and other services offer true high yield. Check this video out if you need more information. Gold is another option to think about. It is considered a store of value. Typically, when investors expect inflation or economic instability, they rush to gold. In the recent months, gold has gone nowhere. Some believe Bitcoin is the new gold. Personally, I'm not a gold investor. More in this video. Talking about Bitcoin, it is a legit asset class. I believe most of us should be investing 2 to 4% of your net worth into Bitcoin and Ethereum. You will hear people talk about Bitcoin as a speculation and is not safe, but then isn't every investment a bet and comes with some level of risk? The idea is that you spread your money across these mutually exclusive asset classes, meaning you don't depend on any one class of investment to build wealth. And since they are exclusive or independent of each other, if one does not do well, chances are others will continue to push the needle forward. By the way, Tiger 21 individuals believe for 2021, technology, healthcare, and Bitcoin is where the opportunity is. So how do you know how much to invest and where? It depends on 3 factors. Number 1, age or duration. If you're in your 20s, you have more time for your investments to work for you. It might make sense to take more risks. If it works out, great. If not, you still have time to make things right. Maybe put money in high beta stocks, Bitcoin, or other high risk, high reward areas. Second, your risk appetite. Some people manage risk better than others. Also, your age will influence your risk tolerance. If you're in your 50s, maybe your risk appetite is lower, and you might want to consider putting your money in predictable assets. Finally, number 3, where is the opportunity? Every now and then, we run into opportunities. Crash in housing, stocks, or other areas. As my buddy likes to say, it makes sense to invest when others are fearful. With that said, here is how I'm allocated. Target versus current. Right now, I'm more skewed towards real estate. Made bets in 2008 and 2012 when housing was still recovering. 2020 was a big investment year for me, where I invested heavily in stocks post the March crash. Right now, any cash is going towards crypto since that is where I see an opportunity. Based on my target, I am overweight real estate and plan on putting more money in stocks and crypto in the coming months or maybe years. Then may have some cash in high yield savings account, hoping to get 10 to 12% yield. Idea for cash is to be ready when next opportunity hits. Now, you could throw in gold and bonds here. They say 5% is a good allocation for gold. But again, bonds and gold is not my thing. Of course, all of this can change depending on how the world evolves around us. For example, no one predicted COVID. Now, this is not going to happen overnight and will take years to get to target allocation. Like it takes a lot to get into real estate. At least have some sort of a vision and work towards it. As you think about accumulating wealth, spreading your money around should be a crucial part of your overall strategy. That's it, my friends. Where are you allocated? Let me know in the comments. Would love to know your thoughts. Like, subscribe. Until next time, peace.